Brad Williams, Frugal Finance. Question here is, how does a mortgage loan officer or broker get paid? There's a lot of different ways. In most cases, the most sensible approach is you, as the borrower, will probably increase the mortgage rate a bit. And then from there, the broker, the lender, will shave off a percentage of that and use that as compensation for putting together the loan. Let's say the market rate, let's say it's 7% at 1% that you have to pay. That means you pay on a $500,000 loan, you're going to pay $5,000. But if you bump that up to 7.25%, you're not going to pay that $5,000. Does it make sense? I'm not going to discuss that. I will discuss the breakdown at some other point. But that 1%, that could be going to the house. In other words, it could be going to the broker. Part of it could be going to the broker. Part of it could be the loan itself. It could be shaved up in a lot of different ways and means. In the past, there was only moderate oversight in terms of how mortgage brokers, how lenders were being compensated. I owned a mortgage business for a long, long time. I was pretty much a white glove mortgage broker, but I knew a lot of shady characters out there that were charging on the back end 3 to 4%. And it's hidden, because what they were doing is they were increasing the interest rate on the mortgage. And you, as a consumer, you're not a numbers person. You don't know how mortgages work. You don't know how fixed income bonds work. Well, a mortgage is just a bond in a sense. So anyone somewhat familiar with the workings, we're increasing the rates, making 3, 4, 5, 6% on a $400,000 loan. And they were doing this left and right, making way too much money. Then the implosion of 2007, 2008, and then the formation of CFPB to prevent that kind of stuff. So to answer this question, there's a lot of different ways loan officer or broker or lender is being paid. But specifically, when you're working with someone to get a mortgage, they're usually paid a loan-specific fee or commission. This money is paid by you or by the lender you use. In the past, the rebates, they were called rebates, you didn't have to show that on any documentation. Today, because of the CFPB, you're required to show those rebates. A mortgage loan officer or broker is the person who works with you to get a mortgage. Mortgage loan officers often work for one specific lender. Mortgage brokers typically work with multiple lenders. While federal law prohibits commissions from varying based on the terms of the mortgage, lenders can pay mortgage loan officers and brokers in many ways. For example, a lender can pay a salary, a fixed amount per loan, a fixed percentage of the amount of the loan, or even a combination. When loan officers and brokers are paid per loan, lenders can also set a minimum or maximum paid per loan. This flexibility in the law allows lenders to set up different pay arrangements to serve a range of borrowers and loan types. Before you work with a loan officer or broker, make sure you understand their fees and who pays them. And remember, you can shop around for a lender and broker to find the best rate. Here's a crazy old statistic. Only 13% of people shop for a mortgage. Yeah, look, here's my only word of advice. Shop. You're going to be absolutely surprised at the variation between broker to broker, lender to lender. Sort of like working with a general contractor. Yeah, if you get a bid from only one particular person, you may be taken to the cleaners. Well, the loan industry is not any different. Comment. Let me know. Let me know your experiences. If you're on the lending side, if you're old school, give me your opinion on CFPB and all the regulatory side of the lending industry. Or if you're shopping for a mortgage, are you actually shopping? Or do you just go online and listen to the crazy recommendation from people who say, use this particular lender while they're getting commission for promoting that particular lender? I don't ever suggest you do that. I think you talk directly with 3 or 4 online and then call up a couple of lenders and just get their feedback. Spend a little time to do this. Don't rush in because there are, like I said, the industry has huge turnover. You may be working for a broker at ABC, but 3 months later, they go over to EFG company, so on and so forth. So you may be stuck working with somebody new in the industry. So check it out. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.